Well, we're staying with the markets, but this time in the U.S., where Wall Street is set for a weak open on Wednesday, paring back from the prior session's all-time closing highs as investors struggle to find fresh catalysts to push the markets higher after the recent rally. Futures for the Dow Jones Industrial Average slipped 0.08% to 22,072, while those for the S&P 500 index lost 0.14% to 2,491 points. Futures for the Nasdaq 100 index dropped 0.2% to 5,993 points. The weakness comes after all three major U.S. benchmarks closed at records on Tuesday, marking the first time the trio achieved all-time highs at the same time since July 26th. And shares in Asia continued their ascent today following a firm lead from Wall Street as concerns faded over the potential damage of Hurricane Irma and as Korean Peninsula tensions took a backseat. The MSCI International ex-Japan Index rose 0.57%, hitting a 10-year high during the session. Japan's Nikkei 225 rose 1.18%. Across the Korean Straits, the Kospi gained 0.25%. The ASX 200 tacked on 0.58%, with bank stocks driving gains in the broader index. Greater China markets, meanwhile, were mostly flat. The Hang Seng Index edged up 0.04% after trading sideways for most of the session. And on the mainland, the Shanghai Composite advanced 0.11%, while the Shenzhen Composite slid 0.27%. Away from the markets now, South Africa's central bank is expected to cut its benchmark interest rate to 6.50% at its next monetary policy meeting on September the 21st. A Reuters survey shows 17 out of 26 economists say the Reserve Bank will cut its repo rate 25 basis points. One said it will cut 50 basis points, and 8 believe that the bank will leave it unchanged. Last month, the median forecast suggested the bank would wait until November before trimming borrowing costs, and economists gave a median 50% chance of a September cut. But that likelihood has risen to 55% in the latest poll. Inflation is expected to average just 5.3% this year and 5.1% next, lower than last month's medians. In the meantime, Moody's Investors Service has warned that the gradual erosion of South Africa's institutional framework and recent pressure on the central bank to change its price and inflation targeting mandate are key risks to the country's credit rating. A senior analyst for the ratings agency also told a conference in Johannesburg that space for the Treasury to implement counter-cyclical fiscal policy to keep its deficit in check had been eroded. On Monday, Moody's has maintained its negative outlook for the South African banking system, saying that projected sluggish GDP growth and an unpredictable domestic political context would weaken banks' loan quality and profitability. Over the next 12 to 18 months, Moody's expects South Africa's weak economy to pose a challenge to the performance of bank loans. Away from South Africa now to Ghana, where the central bank has raised the minimum capital requirement for banks threefold to 400 million cedis, or about $90.2 million, as part of measures to ensure financial stability. The previous capital requirement for banks and new entrants was 120 million cedis. The increases took effect from September the 11th, and the lenders have up to the end of 2018 to meet them. The central bank last month revoked the licenses of 2 banks and transferred their deposits and selected assets to state-owned GCB Bank in order to protect financial stability. Going forward, the regulator says banks will require a more sophisticated and robust capital framework consistent with the growing risk they are currently facing. And Algeria's new government plans to introduce Islamic finance and develop its stock market. This is to draw more investment into the economy, struggling to cope with a sharp fall in energy earnings. The North African OPEC members' finances have been hit by more than 50% drop in crude oil prices since mid-2014, prompted authorities to announce changes to the largely state-controlled economy. And to ease financial pressure for the coming years, the government plans to strengthen the supply of banking products, including leasing and products of the Islamic finance. It's the first time the authorities have openly mentioned the introduction of Sharia-compliant Islamic finance. Oxfam International is seeking compensation for landowners in Uganda who were affected by a pipeline that will transport oil to an Indian Ocean port. The London-based charity is concerned that livelihoods and land rights could be overlooked in a quest to meet the schedule for land acquisition for the 1,445-kilometer conduit that will link Uganda's western oil fields with Tanga in Tanzania. Total, South Africa, China's Snook Limited, and London-based Tudo Oil plc are developing Uganda's estimated 6.5 billion barrels of oil resources, with a planned pipeline crossing 8 districts and 296 kilometers in the country. The pipeline, estimated to cost $3.55 billion, is set for completion by the time oil production begins in Uganda's western Lake Albertine Basin in 2020 and will eventually transport 216,000 barrels per day. Now let's bring things back here to Nigeria, where plans are underway to transform the country's local bourse from the current frontier capital market status to an emerging capital market like South Africa, which is the only emerging market in Africa. Plans have been finalized by the bourse to become a company limited by shares by the end of 2017 or in early 2018. The bill had already passed 2 readings at both the House of Representatives and the Senate. The NSE, which is among the top 3 stock markets in Africa, has posted a record 32.7% index return since the start of 2017. Now let's visit the commodities markets. Now, oil prices are mixed today, dampened by reports of rising U.S. crude stockpiles, but retaining some of the gains made in the previous session after OPEC said it expects higher demand for its crude next year. U.S. oil was unchanged at $48.23 a barrel in early trade after rising earlier in the day. International benchmark Brent crude was down 13 cents at $54.14 a barrel, having settled up 0.8% in the previous session. Today's drop comes after the Organization of Petroleum Exporting Countries forecast higher demand for its oil in 2018 and pointed to signs of a tighter global market, indicating its production cutting deal. Coming up on Business Incorporated in a moment, Nigeria reports a merchandise trade value of 5.69 billion naira for the second quarter of 2017. Please stay with us.